Hey, this is Matt from InvestiQuant. Today is Wednesday, January 13th, 2021. And this morning I wanted to look at a unique market profile pattern that just took place here yesterday. And it's called a neutral center day. And that's based upon market profile day types. And what that neutral center means is that the market broke each side of the first 60 minutes opening range from within yesterday's trading session and then closed within that 60-minute opening range. So the high that was made in the first 60 minutes as well as the low that was made in the first 60 minutes were both breached, but the close was in between those two levels. So that took place yesterday, and what I want to do is look at that pattern, what has happened the next day when you gap down within the prior day range. So let me go ahead and set this up. We've got all four instruments included here. The opening filter that we're going to be using is going to be based upon gapping down within the prior day range. I'm going to go to this profile pattern section. I'm going to grab this neutral center day type. We've got several different day types that are available within our market profile patterns library here. And this is the very first option here, the neutral center day. And then next I'm going to go into the indicator section. I'm going to say that we are above a 10 and above a 200-day simple moving average to put us in a similar environment. And then I'm going to click view results. All right, and here we go. These are the results of going long at 9:30 a.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time, when you gap down within the prior day range following a neutral center day. And this has taken place above a 10 and 200-day simple moving average, so a strong bullish environment where you're getting this neutral center day. Historically, the S&P has 87 samples, the NASDAQ 73 samples, the Dow 82 samples, and the Russell 127 samples. And if we look at win rates on this, which is telling us how many of these have finished above the opening print for the day, you can see the S&P, 61% of those 87 samples have closed above the open that day. For the other instruments, it's not quite as strong. It's more of a mixed pattern. So for the NASDAQ, you're looking at 55%, the Dow 52%, and the Russell 50%. So it's really just the ES which has leaned more towards the long side. The others are much more neutral, just a characteristic of the ES only there. If we look at the average win, average loss, you can see the average win is larger than the average loss in the S&P. That is not the case for the NASDAQ. NASDAQ average loss is larger. The average win a little bit larger in the Dow, and the average loss larger in the Russell. So they're kind of mixed for three instruments, and then the S&P, for whatever reason, has favored this pattern more long-term. You can, if you just look at the equity curves here, you can kind of see the S&P equity curve here is kind of smooth to the upside, whereas the others are more flat. The S&P is the one here in the blue that I've got highlighted here, whereas the others are kind of messy. That's the NASDAQ, that's the Dow, that's the Russell. Those are not nearly as attractive, but for whatever reason, that pattern has been more favored in the S&P. So hopefully you found that helpful. Good luck today, and we will see you next time.